Hi everyone, and welcome to Adulting 101, a video series about essential life skills brought to you by Wayland Baptist University. My name is Johnny Terra. I am the Wayland alumni, and I own and operate a CPA firm called Terra Accounting and Consulting. You can find out more about me and my company at terracpafirm.com. Today I'll be talking about how to build wealth. I think this topic is important because, what you do today will impact your life for the next 80 years. So you can and you should get ahead of the game. So let's hop in and on your path to financial success today. Here's what we're going to cover today: how money works, how to build wealth, and how to create your priority tool. And then lastly, but not least, how to pay off debt. And of course, we'll summarize it at the end. So, how money works. If you had to choose between those two investments, which one would you choose? Investment A or investment B? Investment A has, a direct line, 45-degree angle kind of, and investment B has a little bit of a cap, right? After the first year, it kind of stabilizes and there's nowhere to go, but it's still making you money. Which one would you choose? A or B? So, if you choose A, you chose your income. If you chose B, you chose your expenses. Let me talk about a little bit about what I mean by this. Your income has no cap of how much money you can make. Yeah, Johnny, what are you talking about? Well, truly, I understand that some of you work for somebody else that dictates how much you earn, but in today's society, in today's world, it's been easier to start something on the side. You can cut grass on the side and still make a little extra money. And that's what I'm talking about here. Then, let's talk about the expenses. Why would you think I put that cap there on the expenses side? Well, let's flip that chart a little bit and let's do it that way. You can spend less than $0. There's so much you can do to save money here, penny pinch there, that at the end of the day, you cannot spend negative $100. If you find a way, let me know. But $0 is the bottom line. So, if $0 is the bottom line, in your income, it's unlimited. There's a lot of talks out there that only focus on the expense and not so much on the income. So this is how you build wealth. The first example is going nowhere. Okay? Some people are on the stage. If not, a lot of people are on the stage. Same expenses and same income month after month, year after year. And I want you to pay attention on the black line at the bottom on the $500 line. Right? It's stagnant. It's still $500, but it's not going anywhere. Okay, so let's talk about the second scenario. Going somewhere. Some people are here. They've reduced the expenses, but they don't make a lot of effort on the income, right? So reduce expenses and same income. Look at that. That black line is a little bit inclined. We're doing something good here, but this is gonna get to a point where there's not many other expenses that you can reduce on your monthly budget, on your monthly expenses, throughout the year. You can just eat beans and rice so much, and then pretty much that's it, nothing else. So let's talk about how to build wealth. And this is what I want you to remember. People that are building wealth, people that are doing really good and, they have a comfortable life, they reduce the expenses while increasing their income. Okay, I want you to put some effort in reducing your expenses and get to a comfortable level. But I also want you to spend some time increasing your income. Because at the end of the day, you need to mind the gap. That gap between your income and the expenses, that's how you build wealth. Look at that black line. It's going straight up. And you can control that line if you reduce your expenses to an acceptable level, but also looking for ways to increase your income. Okay, mind the gap between your income and your expenses. Because at the end of the day, if you made $1 million in a year, but you spent $1,000,001, you didn't make money at all. Okay? So, here's my definition of wealth. There's a lot of out there, but here's my definition of financial wealth. Okay, there's spiritual, personal, and etc. But I'm focused on financial wealth. Here's my definition of financial wealth. If you stop working, how long could you survive? Right? What's going on right now in the economy can dictate a little bit of that. So, if you lost your job because of the COVID-19 pandemic, I'm sorry to hear that, but how long did you survive after that? How much money did you have on your savings account to pay for the expenses until you found another job, or you got some help from the unemployment agencies? How long can you survive? A month? 2? A year? Infinity? You can see where I'm going with this. Let's talk about how to create your priority 2. Okay, that's very important to know. I call it priority 2, and some people, of course, call it a budget. So here's the reasons why you have not started one yet. This is what you might be thinking. I don't know how. Well, that's a fair statement, right? You might not know how, and it might take some time. Yeah, no doubt. Reality hits hard, man. That's a big one. So when you're going through the numbers and you're looking, prior month to see how much money you spend on groceries or food and all that, like, man, did I really spend $200 on coffee last month? Or some of you might be thinking that it's limiting you, or it's going to limit you of how much money you can spend in a month, right? So here's the switch. If you're thinking about any of those 4 scenarios, I want you to start thinking this way. If you don't know how, you can use a template. If you Google a budget template, you're going to come up with like hundreds of templates. Or if you use, Microsoft Excel or Google Sheets, if you type on the search bar, you're going to find some budget templates right there inside that tool. Hey, it takes time. I get it. But we can automate some of those tasks. One of the most consuming tasks is to know how much money you spend on each category a month. So if you're using a tool like Mint.com, you can auto-categorize some of that for you. The tool will auto-categorize that for you and cut down the time. Hey, if reality hits hard, like, man, I spent $200 on coffee last month, why did you start doing a budget, first of all? And that's the purpose, right? You're doing this so that you can create a better financial being for yourself. You're doing this so you can start creating your wealth. You're not allowing the economy to dictate what you want to do. You are doing that proactively. And then the last one, if you feel like a budget is going to limit you on the money you can spend in a month, I think you're going lots of different directions and not using the budget as your priority tool. What's important to you? Not what's important to your neighbors, but what's important to you. And that's where you should focus on. Okay, so if any of those 4s come up at any time, think of the template, think of automation, think about the purpose, think about it as a priority tool. Okay? So here's the truth number 1. Okay, you can afford anything. Yes, you can. You can afford anything, you can put your mind to it. But where most people get in trouble is that they feel like that they can afford everything. Oh, I want a new boat, a new car, a new house. I want to take that vacation. I want to buy the new couch. Right? What are you going to do? And what's important to you? What, not anybody else out there. What's important to you, to your family? So you can afford anything, but not everything. Here's truth number 2. It's personal finances. Personal comes first. So if you're looking, over your shoulders and you feel like, man, so-and-so is doing really well because they're taking a trip to, to the Bahamas, or man, they just bought a hot tub, or man, they're driving a brand new car. Well, That's good for them. You might not know what's going on elsewhere on their life. So what's important to you, because it's personal. So, for my wife and I, we like to watch movies. We invested in a big TV and a nice setup on our living room so we can watch movies and we can watch, TV shows. That's what we like to do, and that's what we put our focus on. But you have to find out what's important to you, because it's personal finances. Personal comes first. Fair enough? So, what's important to you? It's to build an emergency fund? It's to get out of debt? It's to buy a car or a house? To take a vacation? Write down your financial goals. If you write down, it's scientifically proven that you can accomplish more. But when you write it down just one time. And then you're going to do one thing at a time. So if it's building an emergency fund, write that one down. And then next time, when you reassess your financial situation and you accomplish that goal, you move to the next one, and the next one, and the next one. There's no option E, all the above. You will accomplish all the above at different times of your life. What's important to you right now? It's personal finances, right? Personal comes first. Write down your financial goals and just do one at a time. One thing at a time. So, here's truth number 3. Budgeting is never a one and done task. So think about it. Your financial life changes as you change your scenarios. Well, when I was single, my priorities were a lot different than being a dad right now. My financial situation was a lot different. Was my wife and I. And now with the kid and the second one on the way, right? We have adjusted our budget for those scenarios. We have adjusted what we believe and what is important to us as a family, and our budget adjusted with those. So budgeting is never a one and done task. So how to build your budget? Okay, the very first thing you start with is your income, the money that is deposited on the bank. Okay, you get that, pull the bank statements from previous months and see how much money was deposited in the month. Then you start with your goal. You have to put that aside as your first item on your budget because it's important to you. So you need to do those first. Then you have your loan payments, right? If you don't pay the mortgage or if you don't pay the car loans, somebody might repossess those. So you got to take care of those. Then let's take care of food and shelter. So even though you want to take a vacation to the Bahamas a year from now, if you don't eat today or you don't eat next week, you're not going to make that trip. So take care of food and shelter, right? Utilities, that's the kind of stuff I'm talking about. Groceries. Then you talk about your bills. So Amazon, Netflix subscriptions, your cell phone bill, internet, all of those, right? That comes to the bottom pole. And then it's everything else. So that at the end of that month, when you do your financial, tool, the priority tool, it's equal to 0. You started with your income, you took out your goals, your loan payments, food and shelter, your bills, and everything else. It's equal to 0. And the purpose for that zero-sum budget is that you are telling every single dollar where to go. You're not, reacting to what's happening at that month. You're putting a purpose to each and every single dollar that comes in on your family. So, here are some examples. Excel templates, very good ones to start. Or mobile apps, such like I've mentioned before, Mint.com. Super easy to use. You just link with your bank. Every time you spend money, that transaction shows up there. And you go back into the app and you categorize if it's food or gas, Netflix, those kinds of items. Then, as some people out there use their checking account at their local bank. Right now, the online platform of your bank has a way to categorize those transactions. So you can start right now with those 3 things. So here's truth number 4. Numbers don't mean anything until you match with an activity. I'm like, John, what are you talking about? Well, let me share 2 examples with you. Let's talk about food first. So instead of budgeting by month, you budgeted by meal. So think about this. Instead of doing $900 for food in a month, and this is just an example, you do $10 per meal, right? 3 meals per day for 30 days. Every time you go and you spend money and you sit down to, for breakfast, lunch, or dinner, right in front of you, you can only spend $10. So if you go to Taco Bell and you get, the dollar menu and you only spend, let's say, $2 or $4 on that meal, you know that you have the extra $6 on the side. But man, you go and buy a steak, at 17, 18, $20 a plate, you might have to do some catch up at the end of the month, right? Because you're going to go over if you don't do catch up for the $900. It is so much easier to track the $10 per meal than it is to track $900 in a month. So let's give you another example about savings. Instead of budgeting by month, let's budget by paycheck. So here's a scenario. Instead of, if you want to save $500 per month, do $250 per paycheck. It's 2 paychecks a month. You know that every time you get your paycheck, you make that transfer to your savings account. Or better yet, automate that and make an auto transfer because you know when your paycheck is going to hit the bank, right? You've been doing that for a while. So as soon as it hits, you make that auto transfer. Or even better solution, reach out to your HR and ask them to deposit that $250 onto a second account every time they run your payroll. So match the numbers with the activity, and it will be much easier for you to remember what you need to be done for your financial tool, right? Let's talk about how to pay off debt, because I know that's important to you right now. So there are 2 possible ways to pay debt. One is the numbers game, right? You pay the highest interest first. There are a lot of payments to track, and it takes a long time. But here's the second one, the emotions. You pay the lowest balance first, you focus on one loan at a time, and you get momentum. Even though there's a lot of discussions out there about those 2 methods, the only one that truly works is the emotions. And here's why. I love numbers. I'm a CPA. However, I know we're also human beings and we're very emotional. And we know that as soon as you pay that very first loan off, right, because you're starting with the lowest balance first, man, you're going to feel good about yourself. Like, okay, let's do it again, right? So this is the only one that works. No matter what everybody else says out there about paying the highest interest rate first. No. At the end of the day, you're going to get momentum every time you pay off one. And you're going to get to the next one. And you're going to the next one. And you're going to the next one. And then sooner or later, you're going to have a debt-free life. So let's give you a scenario, and here's how you're going to build. Let's say you have dedicated $1,000 for your debt-free goal. Okay? Then you're going to put, the name of the creditor, the bank, the current balance of your loan, the interest rate, and the minimal payment, and actual payment. And I'll talk about the actual payment later on. So here's a list of 3 numbers, of 3 loans, right? The balance is $1,500, $5,000, and $12,000. You can see that I've listed them with the lowest balance first, right? I can care less about the interest rate right now, but I also care about the minimal payment. Okay? So instead of setting up the minimal payments, and remember, you set aside $1,000 every month for your debt-free goal, and that's just an example. Instead of paying $142 on the first loan, you pay $576, and then you still make the minimal payment of the other 2 loans. And at the end of the month, those 3 numbers right here come up to the $1,000. Okay, let's fast forward to May. Same scenario, you paid off the first one. Now you move that extra cash, that you paid off the first loan, and you invested that same cash into paying off the second loan. Right now, the payment went from $164 a month to $740. And guess what? You're going to pay that off really fast. Okay, you still maintain the minimal payment for loan number 3. Then, Fast forward to November, everything you got is just one loan. And guess what? You're going to pay that off because you have filled the momentum. Super simple scenario that it works, guys. And it works every single time if you do it this way. Pay the lowest balance first. So here's the final truth. Truth number 5. Here's the information cycle. You heard today about your data, right? Which is your bank statement. You're going to gather all that data from your bank statements and credit card statements. Then you have transformed that data into information, right? From the presentation today, you have gathered some information from the initial data from the bank statement. Then you're going to transform that information into knowledge, right? You know that even though it's a numbers game, you solve it with your emotions. So you pay the lowest balance first. And that's what you're talking about, the action, right? That knowledge, numbers versus emotions, is going to create that action plan for you to pay off the lowest balance first. And that's how you create wealth. Intentionally applied knowledge. Where most people get in trouble, it's these two guys. Knowledge and action. A lot of people out there are consuming knowledge day after day, hour after hour, reading blogs, watching YouTube videos, listening to podcasts, but yet they have not taken any action. Action is the creator of wealth and the creator of change. Not knowledge. Knowledge is potential power, potential knowledge, potential wealth. Action, applied knowledge is what's going to get you there. And guess what? You do it all over again. So don't stop on the knowledge only. Take action. You can do this. So let's recap. Right? Which investment would you choose? Income or expenses? Yeah, the answer is both. How to build wealth? Mind that gap, right? The income minus expenses gap. And you're going to focus in reducing your expenses to a comfortable level. And you're going to find ways to increase your income with a side job, asking for a raise, all the above. But make sure you mind the gap. If you make $1 million and you spent $1.1 million, you didn't make any, move forward at all. What's important to you? Write down your financial goals and you do it one at a time, right? If it's A, B, or C, or D, pick one and run with it. And when you build your budget, make sure that you start with your income. You take out your goal first, have your loan payments, food and shelter, bills, and everything else on that order. Do not change this order or it's not going to work for you. You might work on the first month, on the second or third, but consistency here is the key. It's going to work on year 5 for you if we do it this way. So you know that when you're going to talking about paying off loans and credit cards, you start with the lowest balance first. You're going to get the momentum and you're going to move on to the next one and the next one and the next one, and you're going to have debt-free life. Thanks for checking out this video on how to build wealth. I hope it was helpful for you. Don't forget, you can reach out to me personally. My information is here on the screen, and you can also find out more about the description of this video. Thank you once again, and I hope you have a blessed day.